Well, hello everybody, and welcome to another edition of Hawk's Scan Center Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Center Report for Monday, January 27th, 2014. Now, I know it's been quite a while since I published one of these, and this week turns out to be a really good week to catch up with y'all because I want to share with you some observations regarding some interesting changes in the U.S. markets that I noted as I was doing my weekly research. In particular, I want to show you what I'm seeing as I study the relative strength of different sectors of the market, as represented by some synthetic symbols that I've created for my eSignal watch list. Each of these symbols is an individual ETF compared with the SPY, and I use them to see which sectors are gaining strength or losing strength relative to the S&P 500. This eSignal watch list has the Arps Scan Sentry tools applied, so let's use them to take a look at some intermarket analysis vis-a-vis the S&P 500. So this is the eSignal watch list, and it's got several of the Arps Scan Sentry tools applied, particularly the Trend Exhaustion 1. In this case, Trend Exhaustion 1 is set to look for a cross of the fast and the slow line on the Arps price leader here, Radar 2. And you can see we have the Triple Trender Scan Sentry tool, and I'm mostly interested here in the score, and particularly interested in whether it's falling as represented by the magenta colored numbers or whether it's rising as represented by the green numbers. We also have a Radar 3 Scan Sentry tool applied that shows us the trend strength of each of these sectors relative to the SPY. And we have the same tools applied to the chart. And looking at the main American indexes, it's clear to see that the NASDAQ, as represented by the Qs, is stronger than the S&P. You can see it's above all three trenders. On the chart, the S&P is represented by this brown line. So the S&P is going down, and regardless of whether the NASDAQ is going down or not, it's not going down as fast as the S&P. You can see the Russell is also stronger than the S&P, and the Dow is weaker than the S&P. But the ones that are interesting to me are the sector ETFs. And there are some here that I look to as bellwethers for changes in the market. One of those is the utilities sector. And when I see it getting considerably stronger than the S&P in general, to me that represents fear in the market, people going to more stable stocks. And you can see clearly this utility versus the SPY symbol is gaining strength. In fact, it has been pretty much since the beginning of the year. We've just now broken out of all three negative trenders and have three positive trenders. It's even bullish fear greed with the relative strength of the utility sector, and bullish trend strength relative to the S&P. So this to me is indicating that we may be seeing a turn in the market. Other times when you've seen it rise, it's only been pretty much one bar, maybe two bars. But now you can see since the new year, well, we've got 5 bars in a row now. So to me that's showing a concerted effort that's tending towards a more safe sector like utilities. Another one that I like to look at is retail spending. And if we look at the retail stocks relative to the S&P, because a lot of the market is driven by retail, boy, you can see that the bottom just fell out right about at the beginning of the year, and they have been doing much worse than the S&P in general. In fact, I would say the S&P in general has been driven by biotech and financials, so which are now turning also in favor of safer havens like utilities. We also have some other ETFs that we look at relative to the S&P. You can see that the 30-year bonds have just turned completely bullish vis-a-vis the triple trender as well as the radar 3. So this is another indication that we're seeing a flight to safety. The shorter term bonds are also quite positive all of a sudden. So this looks like more than just your basic pullback. This is not necessarily a collapse in the market, but this could be a major retracement. Now you can see we also have here many other global regions represented by ETFs compared to the SPY, but frankly none of them seem to be doing much better than the S&P. We can see EZU and EEM on the last bar did a little bit better, but EEM is still pretty negative. The Germany is a little bit stronger than the S&P, but most of them are in negative numbers here. What I find more interesting this week is the relative strength of GDX versus gold, and gold versus the SPY in and of itself. Now, gold, as the SPY has been dropping the last few days, we've noticed that gold has been making some pretty nice gains relative to the S&P. And I have noted over the years that the GDX, which is gold producers, generally goes up before gold does itself. And it's interesting to see here what happened at the beginning of the year. Right about here, you can see right around the new year, GDX started to do better than gold in and of itself. And now that was a precursor to gold doing better than the S&P. So I use these kinds of relative strength analysis to conclude this week that we're looking at a flight to safety, at least as far as short to medium term is concerned. I would say that it's not time to be buying any stocks for any long-term investments right now. Now there's still maybe some that are going to go up and go down, especially right now during earnings season, but I wouldn't consider this to be a good time to be making longer-term investments in the S&P 500 in general. I want to thank you for taking your time to watch this video. I hope that you got something good out of it, but I want to remind you that we are not licensed to be giving any financial buying and selling advice, but we are licensed and well reputed for some of the best technical analysis technology in the markets today. So whether it be our own proprietary technical analysis tools like our Sentry toolkit or our popular trenders or radar tools, or maybe you have your own technical analysis ideas you'd like to see coded into the platform of your choice, I invite you to contact us, info@janarps.com, and with all of your trading, may the trend be with you.